Firstly, good afternoon, sir. Welcome to IST. So I'm Vanshika Tayal, sub-editor of IST. It's pleasure meeting you, and I'm looking forward to have a great conversation with you today. So before we begin, I would like to briefly introduce you Indian Startup Times. AST is one of the India's fastest growing startup media platform built by 16 experienced media professionals with over 18 years of combined expertise. So at IST, we bring forward powerful stories from the heart of the Indian startup ecosystem. So at IST, like from VCs and angel investors to founders and operators shaping the future. With 6 lakh monthly impression, 22K plus followers, 1 lakh subscribers, we are rapidly growing community over LinkedIn, YouTube, Instagram, Twitter, and Facebook. I would also like to introduce Mr. Ramesh Chandra sir, who is senior editor at IST, who is joining us for the interview today.
Hi, Devansh. It's a pleasure to have you over here on for the interview, and
Thank you.
thanks for joining us.
Thank you. No, thank you. Thank you, Vanshika. Thank you, Rameshji, for inviting me for this interview with IST. I would love to share my thoughts and add value to your viewers, to your readers, wherever possible that I can. Thank you. Thanks a lot.
Thank you for that. I think before starting, would be happy to know more about you, how your journey started as an angel investor.
Yeah, so the journey started, if I have to go back to the education, I think the journey started from there. I come from a Gujarati family. Numbers and money is always first in terms of, the priorities of what comes, that we have to do. It started from there, I feel. Then, again, if we want to do something in commerce and in something in numbers, there was no other better degree than a chartered accountancy, which I pursued and became a CA in 2015. Did work experience in equity research and corporate finance at a brokerage house in Mumbai, and that's for around 3 years. And then Jan 2018 is where we started Lakhani Financial Services as a advisory, investment advisory, or a wealth management company. Slowly, steadily, we understood that the brokerage industry is getting dwindled down. And that's when we pivoted into the startup ecosystem before COVID hit, where we understood that there's a gap where founders don't come from the numbers or the business background. They come from engineering, product, technology background. And, fundraising, investment, those things were really not mainstream. And it was something where there was a lack of awareness about. So that's where we pivoted, and we thought that we could fill that gap as a strategic advisor and an investment banker to those founders. And that's when, just before COVID, we did our first deal in startups where we raised funds for an e-commerce company. And then again, during the first wave of COVID, to May, that is the peak of COVID, first wave of COVID, we did the second deal, a hyperlocal delivery startup. And that's when then we thought that, okay, this is something now, startup ecosystem in India is really booming. It had already been 4 years then since the Startup India launch, Startup India, Stand Up India initiative launch, the DPIIT certificate, and all those things launched by Prime Minister Sri Narendra Modi. But still, the pickup was not there. And during COVID, I think a massive pickup came up. And then 2021, I believe, or 2020 and 21, Shark Tank India came. So again, it became a little more household. And now, yeah, having started the entire startup journey from 2020 or 2019 till 2026, we've raised funds for 26 startups. We've probably advised 500 plus companies, early stage startups, and we have a group of 700, 750 plus investors, both domestic as well as global. Now we are extending that arm and also helping our Indian startups expand into the UAE market. So that's another service that where we feel next 10 years will be a massive trade and a massive opportunity for Indian startups to expand into the UAE markets. So India UAE bilateral trade deal that has been signed, I think there could be a lot of positives that could come up. That's where we are also working with our clients to help them expand in the UAE and also raise funds in the UAE market. So that's a quick
Great,
thing
great.
about us, and that's the journey in a
No,
nutshell.
that's I think great to hear about it, about the kind of investments that you have been done. Also, I think if you'd like to share some of the names of the startups or the sector wise where you have done the investment, I think that would be pretty.
So, see, we are sector agnostic, number one, as a IB firm, and we've raised funds across multiple sectors, be it sports, there's a cricket, a technology cricket academy, the consumer, We've done apparels, e-commerce, and stuff like that. Recently, we did for a consumer tech oral care brand, which is called Tusk, based out of Mumbai. We did a B2B SaaS, that is enterprise SaaS startup, which is called Bharat Sure, again based out of Mumbai. It's not that we are just focused on Mumbai, but it is just we've done pan India. Then there were tech companies back in 2021, 22 approx. Learn Clue Solutions, Navars EdTech. So there have been different domains. We've done health tech, also we've done agriculture, also different domains, different sectors. However, now if I were to tell, we are more focusing on four strong theses that we have formed, which I think in the next 5 years could really grow massively. One is deep tech AI, which of course people are talking about. Second is consumer internet. It could be a hardware or a software based startup in consumer internet space. Third is D2C brands where there's premiumization at play, and it is something unique product, not just an apparel or a healthy food or something healthy snack, which is very common and crowded, but some uniqueness to it, a different category, and where there's a premiumization at play. And the fourth is sports and outdoor activity based startups. So where we have a very strong belief that last 15 years have gone by everyone into their mobile phones and laptops, and people have been very inward on their screen. Their screen time has ballooned a lot. And now I think next 7 to 10 years, people would start moving outward more, go for exhibitions, events, massive concerts, massive sports plays, sporting activities, outdoor activities. So we are focused on that thesis also, where anything to do with that kind of a thesis, we are interested.
Could you like now walk us through the journey of building such a strong fundraising advisory platform?
We have advised 450 plus startups in terms of their mentoring, strategic business advisory, etc. We have raised funds for 26 startups, as I mentioned in my introduction, which is now the figure is 40 million rupees. It is, 400 million rupees, not 300. So that has increased in the last few months. So yeah, that has been the past. I think the process and the way that we approach has been, again, there's a difference of what we have done before and now what we are doing. I'll quickly summarize what we did before, where we used to help them with their entire strategic business advisory, evaluations, business planning, etc. And that is how we used to work with the startups and then help them raise funds. Now we have created a very strong 120-day fundraising program, wherein within those 120 days, our goal would be to help them close that particular round. So, that is something that's how we operate when we are working with a startup. We understand them. We have multiple set of meetings before we take a mandate, deep dive into the product. We also try to have a mentor on board for that startup, wherein that mentor who's from that specific field and who understands that domain better, domain expert, so to say, who can also ask multiple various questions, जहाँ पे we understand whether this is a fundable company or a not. And that's when we onboard a startup. Once we onboard, we have a very clear-cut, milestone-driven 4-month program, that is 120 days program, and we complete that and try to raise capital for them.
Also, sir, according to you, like you have been actively investing through angel networks. How has the Indian angel ecosystem evolved in the like last 3 to 5 years?
I think you mean the angel network ecosystem or angel investors mindset has evolved?
Ecosystem, basically. So how it has been
Okay.
evolved over last 3 to 5 years?
Now what has happened is that angel network as a concept has diminished little, and all the angel networks, or quite a few angel networks, so to say, have created their angel fund, which is a SEBI registered cat 1 fund, and that's where they have started working, and they've created that legal vehicle, SEBI registered vehicle, where the funds are already pooled in and the commitments are given in advance from their angel investors, and depending on the deals, etc., the money is flowed into the bank account of the fund, and then the fund invests directly into the startup, right? The process is more or less the same, but the vehicle and the structure has changed as per the SEBI norms. Also, one thing which had happened, but now it cannot happen, is that many angel networks had started taking in very small capital, like 50,000, 1 lakh, 2 lakh, and which is like called as retail capital, which was very, according to me, it was not a very good move, because retail investors in India are very naive and they just follow the herd. their capital can be at risk. This is high risk, high reward game, startup investing. I feel there should be a minimum ticket size of 15 lakhs at least, where a certain person with a certain risk appetite can only enter into this investing game. So yeah, that is how it has changed. And but now there are small syndicates that operate. Angel network as a concept has diminished. Most of the angel networks have converted into a SEBI registered VC fund, Cat 1 fund.
Yes.
And that's what it will keep happening. Like more funds will come into the picture. Like smaller syndicates will create their own funds.
Also, which sectors are currently more attract the highest interest from angel investors within your investor network?
I think these four, as I said, and if I have to put from these four, a couple of them, one is deep tech AI, and second is consumer internet. From these four, also, if I have to put a more stronger interest, deep tech or AI, it could be off LLM or on LLM. I think those are of very high interest right now because they are large scale. Global products can be built out there. Global IPs can be built, which creates a strong defensibility and moat. So these startups have a global audience, so to say, in terms of investors, also in terms of customers, also, and that is where I think today's investors are more interested, which can be a global play, not just a domestic play.
Now, talking about the founders. From an investment perspective, what are the biggest mistakes founders are making while approaching angel investors?
Biggest mistake I would say is that, and I've spoken at multiple forums like this point is that um, they don't study the investor properly. A tag is written on their LinkedIn profile, angel investor or investor. तो उसको बस बिना सोचे समझे they will just message on the DM of LinkedIn, or they will extract their email ID and cold email them, which I feel does not work very efficiently in this. I feel where you are asking such big ticket size money from someone, first and foremost thing is to develop that relationship and trust with a person. Only then I think you can ask someone for 15 lakhs, 20 lakhs as a minimum check size. You're not asking someone as a customer कि भाई मेरा 400 रुपए का product ले, which can happen by way of cold email, DMs, spams, newsletters and all that stuff. So email blasts, message SMS blast. This is you're talking about bigger game, bigger amount, bigger risk. I feel that trust and relationship part is something which founders really need to understand, that when that is developed, money can follow. And that development needs to start from day zero.
One thing I would like to ask. So, do you have any kind of an example of where a startup founder has reached out to you in a way which is still with you and which made you him to trust him to give him the
No.
investment?
So one which we had done recently, or two rather, there's both Bharat Sure and Tusk were based on trust and on a relationship that got developed. So Tusk had got referred to us by an incubation center, and the CEO of the incubation center is a good friend of mine. So he had referred to me last year. It came through a strong reference, and that when I spoke to them, and then I met them, 3-4 rounds of meetings it took for us to build that friendship and a level of understanding, and now he can call me anytime, I can call him anytime. It's that level of, he also comes, he was also a merchandise sponsor at our last event, which was Indian Startup Premier League. He had participated, so he participates in the ISPL, our league. So it's that level of friendship now. Similarly with Bharat Sure's founder, we had hosted him first on our podcast. Since then, we started discussing, and also after the podcast, after 2-3 months after the podcast, we were just randomly chatting, and he said that we are raising a pre-series A round of 6 crores. Would you want to have a look? So I'm like, okay, why not? Since I know you already, we can have a look at it. And that's how it started. That's how the conversations picked up. So that's what I feel. I think you need to be in the right network with the right people, and not just go as a shark to hunt them. Like it's a farming thing, right? You need to be a farmer. You need to, you can't be a hunter. You have to be a farmer. So that's how I would put it as, be a part of different networking communities, chill communities, where you meet like-minded people, where you can meet HNIs, Petra HNIs, etc.
And how do you see that the startup founders, not only from the big cities like the metros one, but from the small cities as well, doing these days or looking for funding, and how, because our platform, we are more focusing also on those founders to reach out to them to help them to connect with the right VCs. That's what is at the base of our platform is. So for them also, what would be the right advice, and how do you see a change now with the Indian startup ecosystem growing, a lot of things happening in this
Tier 2, Tier 3 towns is massive, you know. In fact, recently only someone had interviewed and I had said that on Tier 2, Tier 3 is a massive opportunity. There is, and a huge leverage of cost advantage that can be played out. जो चीज़ आप मुंबई, बैंगलोर, दिल्ली में वो वहाँ पे आपको 65,000, 70,000 में लग जाएगा. Anything, whether it is manpower, whether it is technology, whether it is goods, your materials, you can have a huge arbitrage in terms of cost. That alone is a massive opportunity or an advantage to work and start from Tier 2, Tier 3. There's a startup called GTP, Jaipur based. So again, tier 1 town, Jaipur. And, well, they've raised a very good amount of funds, fintech startup. So they did from tier 1. I think Cars 24, Mr. Amit, who comes on Shark Tank, again, Jaipur or something, I think he had started. So massive cost advantage in itself gives you, you know, 3 times, you are already ahead 3 times than a Mumbai based startup, because you are making that much amount of profits, or your costs are being reduced by that much amount already, which talent density is very important. That is the second advantage in tier 2, tier 3 towns, tier 1 towns. I say talent density, it is the stickiness of the talent, and the longer term that they stick to you, they'll be with you. And also really skillful talent. So wo skill, like that skillful talent is sticking around with you for a long term than what that person would do in Mumbai. So these two are massive advantages. I mean, founders from tier 2, tier 3, and a huge role for India as a country to grow is going to come from Bharat, the Bharat cities basically. You know,
definitely. And as we are celebrating this week as a Women's Day week, which is like started from 8th March. So how do you see like women founders now also coming up and giving their best, and or like from anywhere, like from tier 1 cities or from metro, anywhere? So how do you see the ratio now in terms of the founders?
I think it is growing, but it is still significantly less when you compare the male versus female founder ratio. It can increase a lot. I think female women founders in particular have a much more better empathetic understanding of people, of problems, than a man, a woman founder does have a much more better understanding of, how to navigate a certain situation than a male founder can. But because of our society's belief system, a lot of women fail to start their startup, or a lot of women cannot scale it beyond a certain point. They do their home businesses and stuff like that. But that home business can also be very big if they really, put in that efforts, and if the family supports, etc. So there's a long way to go, I believe. But of course, if you see in hindsight, 10 years back versus today, we've also come a long way as women founders. Today, women founders are there from every cities. And I just don't say startup technology, but आप Shark Tank पे देख लो, tier 2, tier 3 towns में housewives, they have their own small shop going on, are doing some kind of meal boxes, tiffin services, कुछ भी आप ले लो, छोटे से छोटा, right? But वो लोग है वहाँ पे. It is just that that number can go way beyond our imagination if there is proper path to that, and a strong support from the society in general, and we all come in that society. So of course, and they need to be strong enough that I want to do this. So number one is their own internal thing, where they believe and they stand up for their passion or their work, that they want to build this startup into a big success. And the second is, of course, then the backing and helping from the society.
Talking about your initiatives like the Level Up podcast and the Indian Startup Premier League, how are you helping build a stronger startup investor ecosystem with these initiatives?
So with the Level Up podcast, it has nothing to do with the investor ecosystem. It is for three things. Number one is educating masses, which again, women, men, etc., who want to start something. And it is to educate them and share the stories of founders who have done something and who have built a little bit also or a highly successful startup, right? But who have started something and who have reached a certain scale. So we are sharing their stories. Second is it is for our content and brand building, right? Where we get an opportunity to build our own content in that particular manner. And third is, which people don't talk about or would not appreciate, is to build a strong network of very, very strong founders who have done something in their life and who have built successful startups. And it is to have and to learn from them, to build that network, to talk to them, to learn from them. That is the kind of community that we can build. Small, but a very highly successful community. And that in itself brings a very good thing. So that's with the Level Up podcast. ISPL, yes, it is. What we want to do is we want to democratize startup investments. We want to democratize startup community building and networking and not keep it very boring in a boardroom and in a banquet hall. It should not just be over, fireside discussions. So IPL started something where EPL was there. In football, the league system was there, right? In NBA, there is a league system where there are teams, franchisees, basically. So that was the mindset where we can integrate an IPL kind of a league, where we can integrate startup founders and investors, and where we can integrate capital raise. And that's where the kind of investors, etc., that come into the picture, they are very unique, they are very fresh. Founders are really fresh faces, and the mentors that are there with every team that is attached, again, very, very, very fresh faces.
Also, could you share insights into the largest investment round facilitated by LFS so far and what made that deal successful?
The largest is yet to come, and we are nowhere close to what the largest that we could do. However, I can talk about the recent one, which is, as I said, we got a referral from one of the CEOs from an incubation center, and that is something where we had helped them raise their round uh, by first and foremost having a lot of discussions with them, understanding the product in detail, understanding their technology, their R&D process, meeting their team, and that's when we got a lot of confidence. And more importantly, and moreover, the founders were super awesome. As a startup, as a new age brand, as something innovative, there is nothing into the oral care, right? So that is somewhere where we start at, even if from the top big sector of all these large corporates, even if there's a 15-20% market share that can be taken for startups in the next 5 to 7 years for oral care, technology driven first startups, that could be a huge share. एंड ये टस्क के साथ साथ ऑफ कोर्स दूसरे प्लेयर्स भी है, शायद नए आएंगे भी, बट अभी वो मार्केट इज स्टिल इवॉल्विंग. It is not crowded, and that is where we felt that okay, this space seems to be very interesting. So now we are again doing the pre-series A round also, which will start soon. But yeah, that is something that we had done that very effectively, and that was the entire process of doing this research, meeting the team, the founders, understanding the product, trying the product ourselves, and stuff like that. So that's what gave us the confidence to take it forward.
Also, many founders struggle with valuation expectations. How do you help balance founder ambition with investor realism?
I think that's where our picture, our role also comes in to balance the two people. Honestly, the founders earlier used to be very highly aggressive in terms of valuation and without understanding the market and stuff like that, without comparing with their competitors, without comparing with the industry standards. But now I feel the founders have become little more sensible and mature to understand that okay, the ecosystem is not demanding that high valuation. How can I demand that? When you are a part of the ecosystem and when you are building something which could be unique, but at the end of the day, there are the few players already doing that and done that. And if they have commanded a certain X, then how can you command more than that, like multiple times more than that? So I think today's ecosystem is little more smarter, little more mature, and they do understand. So our role becomes little bit better. It becomes much more better and easier for us to get the two parties on the table to discuss and close the deal. Yeah, I think that's a sign of a maturing Indian startup ecosystem where we going through a downward cycle. because of a huge boom during COVID and 2 years after COVID till 2023 end. But now 2024 onwards till I think 2026 end, these 2 years we are in a downward cycle, and we would be little bit in a downward cycle, which over the next 6 7 months would start seeing a little bit uptick and start, you know, maturing. So now all the people who don't understand the ecosystem, or who don't, or who are out, they are out. The filth that was there and the froth that was there, that is getting removed out. Now a little more mature players in the ecosystem are coming, talking about EBITDA, talking about numbers, talking about profitability. That's better senses being prevailed in the ecosystem.
Also, as someone who regularly interacts with investors, what qualities do you specifically look for most strongly in founders today?
Number one is their never give up attitude. I think that is a very important thing. Number two is the ability to pivot when things are not looking good, or when you have a clear cut research, data, statistics saying that this industry or this way of working wouldn't work for you. So that ability to pivot. Number three, empathy towards all their stakeholders, and whether it's their employees, co-founders, investors, clients, vendors, whoever, having an empathetic understanding. Uh, if we can vibe together and have that level of bonding where I can call him and say कि अच्छा भाई तू क्या कर रहा है, इधर इधर अपने को पिच करना है, आ जाना. And he can call me and always ask कि भाई Devansh, I need this help, and if you have, so please do let me know ASAP. So it should be that friendly vibe, and that is an icebreaker basically.
Also, finally, for founders preparing to raise their first round of funding, what advice would you like to give them?
Go in for fundraising only when it is required. Plan it in advance. Number three, build relationships with investors from day zero. Don't chase them just when you need them. Build friendships from before. It's okay that time you might not need them, but you never know who you might need when. So build relationships from day zero. That's it is as important as building your product. So I think that is something which is very crucial. And yeah, I think these are the top three things which a founder can always keep in mind while he or she is raising. And it would really help them to achieve that raise. You need to do everything in advance. You can't just at the time of raise, when you need that time, you say that okay, this is something, now I should start working on my connections. No, connections needs to be start being built from day zero when you're working on your prototype also.
Thank you. It was a great interview, and it was great having you here and getting your full insights.
Thank you, Vanshika. Thank you, Chandraji, for having me on this podcast, with IST. Thank you. Thanks a lot.